at this point in time, our course is not complete. We are actually not in a position to be confident enough to get the examination. Should we actually give the examination or not? My response to them is, guys, the examiner wants you to score only 50 marks for qualifying and not 100. So you've got a margin of error up to 50%, which means that even if you are 60%, 70% prepared, that's okay. Do not leave your attempt. Give your attempt. Hello and welcome, guys, and welcome to this short video. And yes, in this particular video we are going to discuss the major amendments which have been carried on by Finance Act 2023 and the implications thereon. And specifically, this video is relevant to all the CMA Intermediate students who are going to give their examination either in June 24 or December 2024. In this particular video, I'm going to cover both direct taxation and indirect taxation amendments which are applicable for June 24 and December 24 attempt. Before I get on to the amendment, guys, a very important announcement, and most of you might be aware about it already. Test series for CMA Intermediate has already begun, and test series is there for 3 subjects, actually 2 subjects, DTI/DT and Audit for CMA Intermediate students. Please WhatsApp on this number and get yourself added to the WhatsApp group, and in that WhatsApp group we'll be sharing with the online link of the online test series where you can have the privilege of this test series. And it's really important. It's high time. We are already there in April. Our exams are in June, so it's high time that we should practice certain questions in an independent exam like environment, so that we are able to understand what are our drawbacks or shortcomings, so that we can improve upon them. So giving test is definitely the most important element of your preparation, guys. So please do not hesitate away from giving test. Chapter wise tests are being organized for DTI/DT and Audit for CMA Intermediate student as well as for CMA Final students. So guys, please give these tests religiously. Alright, coming on to amendments which are applicable for June 2024 and December 2024 attempt, guys. The first and foremost and the most important amendment which has come by in the Finance Act is the change in tax rate which are prescribed in the section 115 BAC. Guys, 115 BAC has been the alternate tax regime which has come for many years now. But this time, guys, this is the default tax regime, which means that by default you will be covered under this tax regime. And if you want to convert to the old tax regime, you can convert to the old tax regime. But by default you will be eligible for this particular tax regime. Guys, in most likelihood the examiner will give us the hint whether the answer is to be computed according to the old tax regime, which is the original tax regime, or the default tax regime, or the default or the 115 BAC tax regime. So depending upon whatever the question is asking us to do, we can do it. If the question is silent, then I'll prefer you guys should solve your answer using the default tax regime, which is the alternate tax regime, and give a note for this particular effect. Now, tax rates for this regime has undergone some change, guys. The old rates were these: up to 2,50,000, 5 lakh, 7 lakh 50, 10 lakh, 12 lakh 50,000, 15 lakh, 15 lakh. This was the old tax rates. Now the new tax rates are up to 3 lakhs, the tax is nil. 3 lakh to 6 lakh, the tax is 5%. 6 lakh to 9 lakh, 10%. 9 lakh to 12 lakh, 15%. 12 lakh to 15 lakh, 20%. Above 15 lakh is 30%. These are the revised taxes for the alternate tax regime. Please note a very important point over here where students are actually going wrong at this point. The original tax regime has not undergone any change. The original tax regime remains the same. Up to 2,50,000 nil, 2,50,000 to 5 lakh 5%, 5 lakh to 10 lakh 20%, above 10 lakh 30%. That is the original tax regime, which remains the same. There's no change in the original tax regime, so please don't get confused. The change is only there in the alternate tax regime mechanism. The 115 BAC tax regime mechanism change is there. Alright, now consequent changes in rebate. Rebate under section 87A is allowed up to 7 lakh rupees. Lower of tax or rupees 25,000 is the amount of rebate which is allowed. If you are covered under the original tax regime, then the amount will be 5 lakhs. Up to 5 lakhs you will be exempt from tax. Rebate will be available, okay. But if you are covering yourself in the alternate tax regime or the new tax regime, then the eligibility will be up to 7 lakhs, there will be nil income tax. Marginal relief will be available up to 7,27,770. Okay, so the exemption limit is also higher in this particular case, therefore the marginal relief will also be available up to this amount. Now, very important thing, guys, standard deduction under section 16(1)(a), this is eligible, this is available in the new tax regime or the alternate tax regime, but deductions of entertainment allowance section 16(2) and 16(3), they are not allowed in the alternate tax regime. If you were in the original tax regime, then all three deductions were applicable to you, were allowed to you in your computation. Okay, sir, got it. Now coming on to salary provisions, and yes, one of the major changes that has hit the salary chapter is rent-free accommodation limits. The value of perquisite computation has undergone a revision, guys. So the population strength has undergone a revision. Now it is more than 40 lakhs, 10% of salary is the value of perquisite. More than 15 lakhs, 7.5% of the salary is the limit, and for other cities it is 5% of the salaries. So very, very important amendment coming by in the rent-free accommodation bit. Another point is that if the accommodation is hired by the employer, okay, that was if the accommodation was owned by the employer. Now, if accommodation is hired by the employer, then earlier it was 15% of salary, now it is 10% of salary, and rest of the rule remains the same. You know, whichever is lower, the rent paid or 10% of salary, whichever is lower, is the amount of value of perquisite that is taxable in your hands. Then a very seasonal change, guys, just a change in the year, where the total turnover of gross receipts of the domestic company during previous year 2021 does not exceed 4 crore, tax rate is 25%. The year has undergone a change, that's it. 21-22 does not exceed 4 crore. So this is a very traditional change which happens every year, and just a 1 year jump in this particular amendment. Leave encashment, the statutory deduction has increased from 3 lakh to 25 lakh, an important update in the leave encashment deduction regime. Coming on to PGBP, profits and gains from business and profession. 43B, there has been insertion of another clause in case of 43B. So let me remind you what is 43B. 43B is deduction allowed on cash payment basis. Now, in this particular section, there is another addition, which the addition is that any sum payable to a micro or small enterprise beyond the time limit specified in MSMED Act shall be allowed as a deduction only on actual payment basis. Again, what is MSMED Act? MSMED Act is an act which is created for benefiting the small businessmen, the small enterprises. Because they are small, the big enterprises exploit them a lot. To overcome the exploitation, the government of India have imposed an act called MSMED Act, which mandates every big company to pay to the small company their dues within a stipulated time period. Now, if this time period is lapsed, if within the stipulated time period the payment is not given to the MSMED Act, then there is a provision for interest, mandatory interest, which is applicable to be paid along with the main amount. Now, additional drawback to the people who are not paying to MSMED, who are not paying to micro and small enterprises, additional disallowance to them, that their deduction will be allowed only on payment basis. Soon as they make the payment to MS category of enterprises, only then the deduction will be allowed. So deduction will be allowed on actual payment basis. Then yes, increase in the applicability of tax audit, section 44AB, a very significant development over here. Earlier the tax audit was applicable not in the special cases, so there were exceptions, but I'm not talking about the exceptions or the special cases, I'm talking about the general limit. Earlier the limit was 1 crore, now the limit has been increased to 10 crores. So now the total sales or turnover of gross receipts of the business which exceeds 10 crore are eligible for tax audit. That's an enhancement in the tax audit limit. Then presumptive taxation, section 44AD, ADA, business profession. Okay, the earlier limits were 2 crores 50 lakhs. So to avail benefit of presumptive taxation, your turnover could be at most 2 crores or 50 lakhs. 2 crores in case of 44AD. 44ADA, the limit was 50 lakhs. Now it has been increased to 3 crores and 75 lakh respectively for both the respective sections. That is how the limit is enhanced in the Income Tax Act. Now guys, no need to really purchase new books for carrying out these amendments or looking at these amendments. You can just make changes in the respective sections in your book itself. Okay, so this is the amendment. Capital gain, yes, CII has has been notified. The new CII is 348 is the new CII. Then important amendment in the deduction section 54 and 54F, which gave certain deduction or exemption to people who purchase a residential house property when they sold some asset or some other capital gain. They had some capital gain in hand, and with that capital gain they used to purchase residential house property. Then there was a provision for deduction which was under section 54 and 54F. Now guys, the limit of this deduction has been restricted to only rupees 10 crores. So you can just avail this deduction up to rupees 10 crores and nothing beyond that. So if your capital gain is 100 crores and you are also investing that money in residential house property, even then the deduction will be limited to only 10 crores and nothing beyond that. So that is the amendment. Income from other sources, a very important amendment coming in. Income from other sources, guys. Winning from online games is now taxable at flat 30% plus cess rate. So it's a flat taxation which has been introduced in income from other sources. Of course, online gaming has been a recent profession, has been a recent source of income. Therefore, recent amendment in the Act. Deduction under chapter 6A. Removal of certain funds from section 80G. 80G is the donations which are given, which are eligible for deduction. Jawaharlal Nehru Memorial Fund, Indira Gandhi Memorial Fund, Rajiv Gandhi Foundation. So these are removed from eligibility of 80C deduction. Please don't see it as any political agenda or something like that. Okay, it's just a normal amendment in the Act. Then extension of date of incorporation for eligible startup. So if you want deduction under section 80 IAC, then your the eligibility for that startup to be commenced was 1st April 2023. It has been extended for 1 more year. Now the startup can be set up till 1st April 2024 to take the benefit of 80 IAC. So these were the major amendments in the direct taxation portion. Now coming on to indirect taxation portion. So there have been quite a few amendments in the indirect taxation portion as well. Number 1, composition levy. Okay, earlier composition levy was not applicable to e-commerce players, right? Now it is applicable to e-commerce operators. That's a major hit to the e-commerce players. Now they'll be covered under the provision of composition levy. It's not actually a hit but a benefit which has been extended to the e-commerce players. Now e-commerce players can avail benefit of composition levy. ITC, there's an addition to ITC block credit cases where you were not supposed to take any credit of GST. There's been an addition to it. ITC shall not be available for goods or services or both received by a taxable person which are used for CSR activity. What is CSR? Corporate Social Responsibility. Now what is this? So guys, the purpose is very simple. Let me tell you what is the purpose behind this particular amendment. Now, Section 135 of the Companies Act mandates every company to contribute, say, 2% of their profit to charitable purposes. Buy something for charity or give some charity or do something for charity. They can either open a hospital, donate somewhere, donate to the eligible cause, or they can open a school within their premises, or can buy an ambulance and use that ambulance for charitable purpose, anything of that sort. Okay, now the restriction is that once you purchase anything, any asset for your charitable purpose, or any goods or services, not only assets but any goods or services, if you purchase any goods or services for charitable purpose, which means for distributing it to mass for benefit of people, right, then ITC will not be available on those purchases from your normal business GST payables. So very clear, guys. Business is a separate point altogether. Business is a separate thing altogether. Buying something for CSR purposes, it is not for your business purpose, it's for charity, right? So it is not eligible for ITC credit, for ITC which is input tax credit. Okay, so items shall not be available for goods and services which are purchased for CSR activities. There's a change in registration rules, guys. Rule 9 of the registration shall be granted within 30 days of submission of application after physical verification of place of business in the presence of the said person. So earlier the rule was that inspection of the premises had to be done in presence of the relevant person only. But now even when the said person is not present at the premises, even then physical verification can happen. So that's a change which has been inserted in that, obviously to ease out the operations, guys, to really make it convenient for people to get the verification done, because it's not necessary that every time the owner is at that place and he is there to get the thing verified. Even when his managers or any one person who's in charge of that particular area is there at that place, then also the physical verification can happen. So that is the amendment. And finally, e-invoicing limit has been further reduced to rupees 5 crores. Earlier it was 20, then it was reduced to 10, now 5 crores. So invoicing is applicable to you if your turnover is 5 crores or more. That is the amendment in e-invoicing. This guys is trembling. Since when it was introduced, since that time it was trembling down, because the government wants more and more people to come under purview of e-invoicing. Therefore, this has trembled, and now it's 5 crores. So these were the major amendments in the Direct and Taxation paper of CMA Intermediate. I'm not talking about any other subject or course. It's exclusively for CMA Intermediate students. Please carry out these changes in the book, and that's all. That will be all. I'll be sharing this particular PDF in the description box. You can see a Google Drive link. I will be sharing PDF in that Google Drive link. You can download the PDF and carry out these changes in your books. And yes, that's all for this particular session, guys. The exam is really near. A quick time check: April, May, 2 months left for your examination. Please don't panic. Please don't be demotivated now. I'm getting a lot of calls from many of you saying that, sir, at this point in time, our course is not complete. We are actually not in a position to, be confident enough to get the examination. Should we actually give the examination or not? My response to them is, guys, the examiner wants you to score only 50 marks for qualifying and not 100. So you've got a margin of error up to 50%, which means that even if you are 60%, 70% prepared, that's okay. Do not leave your attempt. Give your attempt. Whatever preparations you are in, whatever part preparations you are in, do give your attempt. Do not think of deferring your attempt. Do not think of leaving your attempt. So it's really not advisable to leave June 2024 attempt and jump for December 2024. At this point in time, many of you might be under that impression that exam filing date is near. So should we not fill the examination form for June 2024? No, guys, you must and you should fill the examination form for June 2024, because please relax and please understand that you are at pace, you are at the right juncture, you are at the right position, and you will be able to qualify. Don't worry. Even if you're not, you will not be able to qualify, then also give it your best shot, guys. Don't quit. Don't quit. Just refer to scanner. If you're not able to do all the chapters, do the chapters which are most important, which have repeatedly passed, have occurred in the past examinations. Do those. But appear for the examination June 2024 attempt, because it will really be a disaster if you do not fill your June 2024 examination after coming so far. Yes, you have employed your heart and soul for next 2 months. Employ further heart and soul and leave rest to God. Whatever is in destiny will be in your hands when the results are out. As of now, do not determine your destiny. Just give it your best shot and leave rest to God. Do not make this mistake of not filling the June 2024 examination form. Yes, the last date is also around the corner. So go ahead, fill the examination form, and all the very best and happy studying.